Testing 1, 2, 3. There we go. Good morning, everyone. I'm just back from a hike with my dog, and I went on the charts earlier this morning, but getting set up and ready for this morning. We've got news at 8:30 and 10, I believe. Just double check. It's Thursday, January 22nd. We've got GDP quarter over quarter at 8:30. Forecasted at 4.3%. We came in at 4.4. So, GDP is good for the economy, so a little stronger than anticipated or forecasted. Unemployment claims forecasted at 209. We came in at 200. So there were fewer unemployment claims filed than anticipated. 1 second, guys. There we go. Sorry about that, guys. Had somebody come to my door unexpectedly. Okay, so let's just take a look here. So unemployment claims were fewer than forecasted, so that is good for the economy. So fewer people claimed unemployment insurance. And what else do we have here? Final GDP price 3.8 as forecasted. Consumer confidence, that's for the UK. Core PCE coming in at 10 a.m. And that is pretty much it. Tomorrow we have flash manufacturing at 9:45. Yeah, so news coming in at 10 a.m. That's it for this week. Hey, good morning, Andre. Good morning, dear UK persons. Okay, so we've got 10 a.m. news. I'm just going to put that on my chart. So just in looking, let's take that off. Just in looking at the 1 hour here. So this was the low of the week so far, which was Wednesday. So Monday, Tuesday dropped, Wednesday made the low of the week. So I think that's the low put in for the week. And we're back above this daily BISI. So that's kind of my benchmark when we're above it. For me, it indicates bullishness. Price filled in this opening gap. That was Sunday night. That was a big opening gap on Sunday night. So we have now completed that. And we are again, price is headed for this level on our chart that we have been, that we've had on our chart for the past 7, 8 weeks. This blue area here. And this is where IPTA has been repricing to multiple times. So that'll be interesting to see if we can get some leverage up there today. Ultimately, hey, good morning, Livier. So just kind of thinking about reviewing what point B is, in terms of where is IPTA going? Is it going back into this level here, which is around 25,960? We still have not made it above here into this other blue level up here, and then ultimately this SIBI here. We have not come up to this really since, well, that was December 11th, and then December 5th. So that was beginning of December. You can see that price has pushed up close to that area, but we have not come up to this area yet. Oh my goodness. My silly internet here. Give me 1 second here. My goodness. No momento. To remove this, to take out the buy sell buttons. So that's basically where we are. 2 more days left in the week. We are above previous day high. So I'm gonna just take a look at the 4 hour here. So lots of strength up since hitting that Wednesday low. We're above year opening, above the week open. We have previous week high, previous month high above. I anticipate if price gets up to above 855, we're going to expect some chop up here like we've seen prior. And as ICT says, as price reaches closer to those higher levels, not necessarily all-time highs, but some price distortion. So yeah, so we'll kind of see what happens. We've got 10 a.m. news. Anticipating 10 a.m. news. We have been from, let's see, 4 a.m. up until just recently, price has been accumulating. Hi, just USA. So price has been accumulating. So it's been engineering liquidity above and below. So really, we'll see whether price wants to continue higher or if we're going to reach down, manipulate. We've got London low below, we got Asia low, and we've got midnight here. So we'll see if price wants to manipulate a little lower before moving higher. Definitely we are bullish. Let's just take a look on the weekly and see where we are. Hi, T-Shep. So here's our weekly. So we can see that Wednesday we put in the low. We swept all of this liquidity down here, and then price has just been doing nothing but moving up. This is opening price. So here's the week open. So we opened, we moved down, and then we are here. So it'll be interesting to see if price wants to, for the week, sweep up here, if it's going to happen today. And price came down earlier this week on Wednesday. We came just above the consequent encroachment of this order block. And again, if we reach up into this area here, we have lots of wicks, and we could expect a bumpy ride up here. Anyway, that's what I'm looking at. I am only interested in A+ setups. I'll be waiting for the 10 a.m. news. Hi, David. Good morning, David. So I'll be waiting for the 10 a.m. news, and that again is consumer confidence, core PCE. Oh, consumer confidence was Euro. Yeah, it's core PCE. Other numbers that came in today are, steadfast. Final GDP 4.4, which is 0.1% over forecasted. So that's good for the economy. And then unemployment claims down, which is good. Good for the people, right? Less jobs. Less people lost their jobs. Less than forecasted. Already we can see some chop here on ES and NQ. So we've got movement up, then down, then up, then down. And previous day high is right here. My chart. Previous day high is at 25,653. And we took previous day high at 3:30 this morning. Here we have London. London on my chart is divided into 90-minute segments. If you guys are interested in what these boxes mean on my chart, they are 90-minute time cycles. And I use 90-minute time cycles because they're 90-minute time cycles in terms of like liquidity above and below. And I learned, I'll just put it up here on the chart in case you guys are interested. I learned about time cycles from Zeussy. I took a 3-month mentorship with him and learned about time cycles and time. Unfortunately, he doesn't offer that monthly mentorship anymore. I got the last 3 months with him, which I'm so grateful for because it made a big difference in my trading. And then you can also look up JME on YouTube. So both these traders, Zeussy and JME, I think were partners together. They've gone their separate ways, but they trade exactly the same. And both of them have uploaded to the internet all of their training videos for free. So I think what I'll do is I'll put a link in the description of today's video to both of their training videos. My preference, I kind of like how JME, they're both really, really good, obviously, but I kind of like JME's videos. They're very short, to the point, and you will learn about time cycles and how time is really, really important. So anyway, I'll link in the description if you're interested. And for anyone who subscribes to Cronus for the monthly indicator package, one of the indicators in that $20 package are these time cycles. And inside these time cycles, if I'm trading London or New York PM, I use the 30-minute. So you can see inside my 90-minute boxes here, I have broken down into 30 minutes. But when I'm trading New York AM open, I only trade, like, I use the 90 minutes, not the 30 minutes. So I just take the 30 minutes off because less is more on my chart. But I just wanted to let you guys know that if you were curious as to what these time cycles are in my chart. I know, like, I'm sure everybody has been studying ICT to death, but I found JME and Zeussy, uh, they're very specific in their trading style, and so I trade their trading style. So it's ICT, but time being the main element. It's time first, then price. And if you haven't yet found a trading strategy that that you're happy with or comfortable with, these guys made a big, big difference. So anyway, I'll leave it out there for you, and I will link their full set of videos, training videos, and they talk, each video kind of builds towards what the time cycles are, and it starts with, how to find liquidity, point A to point B, what a point of interest is, making sure that when you enter a trade that you have that point A to point B. So they really go through the ABCs. So anyway, that's all I'll say on that. And for those of you, I know there's a few of you that do trade this method, and I think that pretty much everyone has had like nothing but really positive feedback on these time cycles. So anyway, I'll take this off for now, but I will link in the down below. And just before the market opens here, guys, we've got 10 a.m. news. So just heads up on that. I won't be doing anything before 10 a.m. We have consolidation here. So manipulation may be delayed. I don't know. But price has been engineering liquidity above and below. And just on the 1 hour, let's just go to the 1 hour. What we have above us is again this key level that's been on our chart for 6 to 8 weeks now. Price seems to be gravitating again towards this area. We are above this daily busy, and we have filled in the gap from Sunday night's opening. So that's where we are. Here's the 4 hour candles indicator that I use, which I love, and I'll be waiting for that 10 a.m. candle to open up. If manipulation is delayed, then it may be that I'll be looking for something in the 1045 macro, 1045 to 1115. So okay, so that is where we're at. Guys, this is not a signal service. I'm not a financial advisor. I don't encourage anyone to trade. It's risky. You'll lose money. There, I'm an ICT student of 2 years and then a year and a half prior with Terry Iomi, who I learned to trade from, and I think she has the #1 ranked trading course on the internet. And I'm coming up to my 4th year of trading in February of this year, next month. Okay, so I'm going to go to the 1 minute because I like to see the first presented fair value gap form. Now, if you subscribe to Cronus, to his package of 4 indicators, then that is something that is in his package. You'll automatically get the first presented fair value gap each day. So I just noticed on the, it's just an observation, but on the 4 hour candles, um, we do have a lot of wicks to the top side and the bottom side. And again, where am I here? Here we go. This is my 1 hour. Should be my 1 hour. Sorry. Okay. Just a lot of wicks, right? So price has been like in a tight range. We had a nice movement overnight from 2 a.m. up. And all of these levels on my chart are from Cronus, from his 4 indicators. And I don't benefit, I'm not benefiting from recommending him, but after charting my own levels for, almost 4 years, it is so nice just to come to my charts and have all these levels on my chart. And you know what? For 20 bucks a month, like we pay more for coffee, for goodness sakes. We do in North America anyway, so so if price is going to continue up today to expand up, then I would want to see it come down and sweep. We got London low here, we got Asia low. Again, 10 a.m. with 10 a.m. news coming in. I do have my 1 hour BISIs that I have on my chart, and this is when price was moving up. So I just keep those on my chart. I don't need to move them over until price becomes on the sell side of the market maker model. For now, we're still moving up, so just going to add one more BISI, 1 hourly BISI right here. That is from this morning. I always add the time frame so that I know if it's a smaller time frame. I'm going to move this daily over just a little bit. I know that we're above daily and we are above this opening gap here. So I'm just going to move this over as well. We don't need to have this in my face. So now we can just see clearly where we are on the 1 minute. We have our 4 hour over here, and we have all our levels that we need, including our time cycles. So London 1, 2, and 3, they're 90-minute time cycles. We have AM1, we're in AM2 right now. So the time cycles is based on accumulation, manipulation, and distribution. Now, not every time cycle adheres to accumulation, manipulation, distribution, because sometimes manipulation can be delayed. So if manipulation is delayed, then the time cycle is pushed out by, 1 or more. But that's the general gist of time cycles following the accumulation, manipulation, distribution. So what we have here is a double SMT. So we have an SMT 30 minutes above and an SMT below. So for my trading model, I only want to have an SMT on one side. So a double SMT like on both sides would be a no bueno. So there's our first presented fair value gap. Oh, and it's gone already. YM is pushing up or has been pushing up. And NQ and ES are, well, they're more in sync. First presented fair value gap for NQ. So I'm just going to point something out here. I'm going to just move this over so you can see my screen really clearly. So let's just take a look here at these time cycles. I'll just show you kind of what the philosophy is here. So here we have London 90-minute cycle, the second 90-minute cycle, and the third. Just take a look at where these cycles finish. So this cycle, the third cycle, took out the low of the second cycle. Price moved up, we came down, AM1, which starts at 7 a.m. The low of this cycle took out the low of the previous cycle and price moved up. Now we're here on the AM2 cycle, so it's the second 90-minute cycle. So the AM session has three 90-minute cycles. Every session has three 90-minute cycles. So AM1 took out London, the third cycle's low, and moved up. And AM2 took out the high of AM1. So this is how you can use the 90-minute cycles. And again, if you're trading London or the New York PM session, you move to the 30-minute cycles. So anyway, it's if you subscribe to Cronus and take a look at the videos by JME and Zeussy, and you'll begin to see how these 90-minute cycles are just fantastic. So this AM, the second AM cycle here, we've just taken out the lows of AM1. Anyway, I'm just piquing your curiosity with how these cycles work. So our macro starts at 9:45, and we're just looking to identify potential manipulation. Hey, good morning, Tandy. I always like to review exactly what my criteria is for entry. I do this every morning. I run it through in my mind, in my head. I visualize what I'm looking for, what I need, what I want to see happen. I want to be super, super clear. So price is in the first macro, and as we can see, it's moving towards London and Asia. The Fibonacci from the swing low to the swing high. This is our 50, 62 to 79% would be OTE, optimal trade entry, as per ICT. So I just keep that in my mind. But ideally, I want to see London or Asia, like I want to see the lows swept, and my institutional order flow bias, if you will, is bullish today. That can change. I'm just saying that we're above the daily BISI. Price has been moving up. So I'd like to see price sweep liquidity below uh, and then move up. It doesn't have to. We've had this accumulation here. This is how the market moves. The market is either accumulating, it's manipulating, or it's distributing. Distributing. And yes, patience is a position. When you have the 4-hour candle on your chart, embedded in your chart, this is just a free indicator. The red line here indicates liquidity being swept. And you can have more than one time frame on your chart. You can download the indicator twice and then just program it um, to whatever you want. You can program the second one to be like maybe the 1 hour chart or the daily chart. So you can have multiple of these indicators on your chart, which is kind of cool. I'll also just mention that in using these time cycles, if you move to the 15-minute, on the 15-minute, you can see the time cycles on a higher level. So you can see the morning, you can see Asia, London, the morning session, the afternoon session, and then again, Asia, London. So on the 15-minute, you see the larger time frames, and then you can look at the day before to find the cycle highs and lows, which is also very handy and useful information. So you can see on Wednesday morning, well, this is the previous day low, and that was in the morning session, the low of the morning session. Anyway, it's a really nice view to have. Again, I don't benefit in any way from uh, this indicator by Cronus, but it's a game changer. It's like driving with power steering versus manual. 10 a.m. news out. nice way to recognize institutional order flow is by just recognizing the breakers on the chart. So we can see here that price is in a pattern down, and we can see that it's a low, high, low, low, high, low, low, high, low, low, high, low. So when you begin to recognize the breakers on the chart, it's a nice way to identify institutional order flow. So neither ES nor NQ have taken London low yet. I want to see if it'll come down and take Asia. NQ has just kissed the low of London, and ES has not. But I just want to see if I'll be interested or curious to see if price can take this Asia low, and then maybe in the 1045 macro have a movement higher, have an expansion higher. So again, you can see with the cycles that AM3 has taken the low of AM2. Now we've got some price distortion. We have a 90-minute SMT and a 1-minute SMT. I don't really care about the 1 minute, but we also have an SMT above, which is no bueno. We just want to have, when I've changed the state of delivery first, and then we want to have a nice clean SMT only on one side of the leg. So right now we can just see like we're still continuing lower. We've come down to the 79% of optimal trade entry levels. And we're just consolidating here. London session is 3 to 7 a.m. Let me just take a look. Well, so by my 90-minute time cycles, London starts at 2:30. And manipulation, true manipulation, is any time from 2:30 on. True manipulation does not happen before 2:30 a.m. That is from some traders that I have followed for about 18 months. Some very, really, really good traders, and they trade the London session. I watched London last night, so I didn't see anything. There wasn't anything for me last night. Still, we have some price distortion here. I'm going to wait for the 1045 macro. I still want to see if we, to see some nice displacement below London. And I think 5 a.m. is lunchtime London. I think it's ICT that says to be out of your trades by 5 a.m. just to exit any positions by 5 a.m. But it depends what you're trading. So I want to see some nice displacement below London or below Asia. A lot of price distortion here. Anytime price moves from a buy model to a sell model on the market maker model, this precedes a change in the state of delivery. And a change in the state of delivery simply means we change from a sell program into a buy program, right? So this is, this is chop. This is not to be mistaken with anything that we're looking for here. But ultimately, we want to see something that looks like nice displacement down, low, high, lower low, higher high. And we want to see inverted fair value gap here off this leg. And we want to see a SIBI, or sorry, excuse me, a BISI here. And this would be change, excuse me, an inverted fair value gap here. So price would come down. There are buy stops here. Price comes back into this inverted fair value gap, which is created here. So traders think, okay, price is going to go up, so they enter here. Smart money takes out these stops, pushes price one more time, takes out these stops, took out these stops, pushes down one more time, and then creates displacement. Nice, fast movement. We want to see nice, strong, fast candles. We want to see price come up, come through this inverted fair value gap. Change in the state of delivery would be somewhere around here. Change in a state of delivery, and then we want to see, sometimes price can just continue up, but it depends what your trading model is. And so I like to see price come back down into this inverted fair value gap and then move up. Let me just see what's going on here. There we go. One thing about Cronus and his team, like they make updates all the time and they try and do the updates off hours so as not to interfere with trading time, which is fantastic. So this is what a smart money reversal looks like. And it has to be in the macro time frame. So we did not take London yet. And we did not take Asia. Here we have ES, did not take either. But I need to see with displacement, like with force, with displacement, with strength. We want to see London and Asia being, or at least Asia being taken out. I want to see liquidity purged from a higher time frame. So I'm just going to let this thing run, but I want to see a violent move down. That's what I'm waiting for. That's what I'm looking for. And with this model, I find like it happens often, like every day. It may not happen like in the same time frame every day, but it happens enough that I can be patient and wait for this exact setup. So chop, 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 chop. I want to see a violent move down. I want to see, I want to see that. And then I want to see this. And I want to see this. I could just move this over. I want to see this. Oh, that's what I want to see. Just USA, this indicator, this SMT indicator shows SMT from the 1 minute all the way through the weekly, monthly, and I think quarterly, like all the time frames. Let's have a look. So see here, see how we're getting some strength down now? Let's just go to his SMT here. Where is it? So this SMT shows quarterly, monthly, weekly, daily. It shows Asia, all of the sessions, 90 minutes, all the way down to the 1 minute. There we go. Show us some strength. Good morning, XMT. Good question. Time distortion. I don't really think, I think of time as being fixed. Like time doesn't really distort because time is fixed. 6 o'clock is always going to be 6 o'clock. 10:15 is always going to be 10:15. But what does distort is price, because the cycles of accumulation, manipulation, and distribution, they can change, they can move, right? But time cycles are fixed. 3 p.m. is always going to be 3 p.m. Eastern Standard Time, and nothing is going to change that unless, unless we have the yearly change. So I think of the only thing that is that moves is price, and that's why time always comes first. Now, in the description of every video that I post, if you look in the description, I have details of the model, but I've also added 6 kind of like little anomalies or things. And one of the anomalies is if price manipulates very clearly before the macro, then we can enter the trade 3 minutes before the 10:45. So we could enter as early as 10:42, anticipating that once that macro opens up, the price is going to move pretty quickly. So still here, we have not taken London. Okay, we have not taken Asia. We have nice SMTs here, but we also have an SMT up here. We can also see that on this 4-hour candle, when we have on the 4-hour candle a wick above and a wick below on the 4-hour candle, this is a no bueno. We want to see we need to see institutional order flow in a direction with some strength, and this is ambiguous, right? It's buyers and sellers are agreeing on a price, and that's what this type of candle is showing us. So we don't want to see buyers and sellers agree on a price. We want to see either the buyers take control or the sellers take control. I'm still anticipating, for the average trader, they've entered long here, right? Like a lot of traders would see this and go, oh, equal lows, um, I'm going to enter long. And then nasty smart money is going to tear down, is going to take all of their stops before moving up. And we can look to the macro to have a move like that. Now, it doesn't have to. Price could just continue up, and smart money doesn't take out any of this. But I'm just trying to bring some anticipate what price might want to do, right? And I'd still, here's the low of the 4-hour candle. I want to see liquidity taken here. See, we might get this push down. Let's see. You could be right, XMT. I mean, I'm just sharing If you have a video or something that discusses that, maybe you can post it in the discussion area of the video, because that would be, of interest. Ludovici, I took a couple really soft trades yesterday, but I didn't really trade the last 2 days. But no, I just, that volatility is not for me, especially with Trump talking. Yeah, XMT. I mean, there's so much information, but you could be right. That's just my when I think about a graph, right? We have the x-axis and the y-axis, and the time axis is fixed in my mind. But you could be right. You could definitely be bringing different perspective here. Well, Tandy, institutional order flow is on the higher, it's on every time frame, obviously, right? But institutional order flow on the higher time frame would be on the monthly, weekly, and daily. And that's what we're looking at to guide us in terms of what is institutional order flow. So if you look at the monthly, weekly, daily, it's bullish. But then you could look at the 1 minute or 5 minute or 15 minute and say, well, it's bearish order flow right now. Yes, but on the 1 minute or the 5 minute, like that's that's not if we just look at the 4 hour, I mean, it's very easy to see that price is bullish, right? That's institutional order flow. So when I'm looking at the charts on a weekly and a daily basis, I am framing, where does price want to go? This is what I ask myself. When I see this, where does price want to go? Where is the liquidity on the higher time frame? Well, the liquidity on the higher time frame is up here, in my personal opinion. Why? Because this is where price is drawn to time and time again, right? We came above the daily, busy, we're above it, and we filled this gap, and we came above it this morning. That is institutional order flow on the higher time frame. But when we drop down to look for a trade, and I want to be super, super clear, is I have the hourly on my charts clearly defined. And only when price reaches a significant level, either a fair value gap on the hourly or a previous session high or low, that's when I drill down into my 5 minute to look for an entry model. Take a look at the 4 hour candles here. Look how tight the last 1, 2, 3, 4, the last 5, 4, so those last 20 hours, we are trading a very tight area, okay? We look at London last night. London ranged. So I only want to drop down to the 5 minute when I have a very clear vision in my mind of what the higher time frame is doing. So I may be on the 5 minute and 1 minute with you guys, but in my mind, I want price to drop because I am bullish on the higher time frame. So I'm not interested in a short. Not to say that you can't take a counter trend, but why not swim upstream with the salmon rather than against the tide, right? So that is institutional order flow. And to my point is what I was saying is that for those who have trouble figuring out which way institutional order flow is, first of all, you got to start on the higher time frame because that's what you want to swim with. You want to swim with the tide. But I'm saying that you can find breaker blocks all the way down, right? So here, low, high, low, low, high, low, low, high, low. Those are breaker blocks. That tells you we're bearish in this leg. I hope that helps, Tandy. Did you, Lavere? I'm just suspicious with London and Asia not have been taken, but I can see why. I just I'm thinking in the macro. We might come down. I don't know. Okay, I see what you're saying, XMT. Yeah, it's a pretty fine line, like between a market structure shift and a change in the state of delivery. The two are pretty, pretty similar. The veer, I can see why you took a long, but here's why I didn't take a long. I want to see, and everyone's threshold is different, but I want to see a very clearly defined inverted fair value gap. And I just don't see one on well, let's move down to the 1 minute. The first inverted fair value gap that I see is like here. Now there could be one on the 15-second or 30-second for sure. Again, I'm gonna wait for that macro because smart money is so damn nasty. And I just see all these people who took longs here above London and Asia. And smart money, they are cheap and they want to buy at the cheapest possible. And if they're going to buy millions and millions of shares, they need to have traders sell or close their position down here, right? When sellers close or are taken out of their position down here, that creates liquidity, that creates volume. When there's a buyer, there needs to be a seller. So if smart money is going to buy 1 million shares this morning, they need people to dump shares onto the market and they want a really, really low price. So on the 1 minute, here is the first inverted fair value gap that I can see. We have a fair value gap here. We have a BISI here. We have a low, high, lower low, higher high. So I mean, technically, there's a bullish breaker. But again, I'm nervous because I want to see like with strength. I want to see when I think of liquidity being purged by smart money, it's violent, right? It's like they are rushing to get somewhere. That's like for me a really good setup. But Levere price could go all the way back up to all the way back up here to London High. I mean, none of us know what price is going to do. But all I'm doing is sharing with you. I'm looking for A plus setups, and I'm patient enough to wait for them. And Levere, like honestly, I'm terrible at like scalping. Like honestly, I am the worst when it comes to like taking 20 points and then getting out. I hang on too long that those trades always come back. I end up break even or losing on them. And I just recognize for me, like I just suck. I suck at the like shorter time frames. It just, I don't know, it's just, I think I'm an optimist and I think, oh, price is going to keep going, or, I have a level in mind and then it just doesn't get there. So the 10 a.m. candle is back to above the opening price, so it came down lower here, and it's come almost 50% of this candle here. I'm just going to adjust my Zeussy here from the 1 minute. And there's my inverted fair value gap. Oh God, gosh, Lavira, you're so sweet. Honestly, you have such a good handle on the market. Like we do see the market very similarly. I guess for me, everything changed for me when I saw this model working out so frequently. And I'm not saying that, you know, there are different models for different people because we see the charts differently, right? This is an art. But I see this model so clearly, and it's just when I see it, it's so clean, it's so clear, and it just makes trading a very beautiful process for me. And I want to have that feeling when I get in a trade. I want to feel as confident as I can that I've stacked as many of the probabilities on my side as I possibly can. And because I see this model show up so frequently, like I feel really confident that if I miss a move, I don't care. Like I'll find another one this afternoon, or I'll find another one tomorrow morning. It's like it's no stress for me. I just want to point out, take a look up here what happened at 9 o'clock and then 9:26. So take a look up here, guys. Here's an example of like a pretty nice setup. So we had price come up. I would have liked to have seen this price take this high. And then, but we do have a nice SMT. So you see here on ES, we have an SMT going up, and on NQ, we have an SMT coming down. We have a very nice big drop strength coming down. We have a fair value gap, and over here we have um, an inverted fair value gap. Okay, so this is a lovely setup, but because we have news at 10 a.m., I'm not taking this. Like I'm not taking a trade half an hour before news comes out. But let's just say there was no 10 a.m. news. This would have been very nice. Price took London high, right? So price came up, took out that high, came down, we came back up, created this fair value gap. This is a mitigation, technically a mitigation block, and then price dropped. This is the setup. So we already saw the setup once today. It's just, are you going to take it before 10 a.m. news? That's not in my model. So, yeah, so there you go. Price came to the order book. Levere, I'm terrible with order blocks too. Like it's not the first thing that I see. We're holding above this inverted fair value gap, which is nice. But let's see if during the macro, if we come back. And let's see what happens with the first presented fair value gap. Once I post those videos in the description of this video of JME and Zeussy, you'll get a flavor of how strict they are on waiting for their A plus setups. Like, I mean, strict. And this really helped me develop my strategy and become very, very strict. So the 10:45 macro has started. And all we're doing is we're just using the inverted fair value gaps from the sell side of the market maker model as support for price to move higher. So that's all you're doing, is you're just taking the fair value gaps, which become inverted fair value gaps as price moves up, right? These are CBs on the way down, and then on the way up, when price uses them as support, they become inverted fair value gaps. And then you just ride them up. So each one should, if price remains bullish, each one should then become support for price to move up. And then on the right side of the curve, which is this buy side of the curve here, we have our breakers. High, low, high, high, low, high, high, low, high. And this is how we know that institutional order flow has changed. Oh, T-Shep, well, I'm sorry to hear that. I hope that everything is okay with you, and I hope that whatever experience you're having in the hospital, that you feel better really, really quickly. Hopefully you've got some good, strong Wi-Fi. So let's see, now that we're in this macro, let's see if these inverted fair value gaps indeed hold, or if price wants to come down. Immediate, this is a immediate rebalance. Yeah, XMT, honestly, everything changed for me when I developed like the system through what Zeussy and JME were teaching. And once it became very clear in my mind, see how price is dropping now? The smart money, they are, oh, they're greedy. They are greedy. And once it's very clear in my mind what I'm looking for, like crystal clear, it makes trading much more relaxed for me. I have no FOMO. You know, if price is going to run, I know it's running to a significant area of liquidity, and all I have to do is wait patiently for that liquidity to be purged. So I know that this model shows up, if not every day, every other day. This model is not a great model when price is accumulating, because then it's in a really tight range. So you're not going to get that really nice, clear displacement, right? So that's not my strength. Like, I just don't trade that environment very well. But when price is running nicely, and I mean like You know, we had some red folder news. There's no Trump or any other type of external manipulation that, you know, messes with the market. When price is running nicely, it's just it just makes trading just so much easier and, dare I say, joyful, because all of the rules just work out. Like, it just, the probability is just stacked in your favor, and it's much, it's easier on your mental health, it's easier on your emotional health, it's easier on your pocketbook. And when you see it play out time and time and time again, you're just willing to wait for. See, again, this 4 hour candle, the wick above and below, I don't like. I just don't like it. It tells me that institutional order flow is ambiguous. We had price move up at 2 a.m. Then we had the 6 a.m. candle take the high, purge liquidity, come down, but it didn't come down far enough to take out any of this liquidity. Then the 10 o'clock opened, came down, but only took out the 6 a.m. liquidity. I would have liked to have seen it take out London and Asia. Now, not to say that, like, Levere, you know, he took a long. Why not? You know, like, Levere has his own set of rules that he's going to trade with, and there's nothing wrong with that, right? Like, there's nothing wrong with that. There's a million ways to trade this market, but I'm just letting you know that I am waiting for that A plus setup, and when I see it, I see it, and when I don't, I don't. And it's taken me a long time. Like, it'll be 4 years in February that I learned to trade, like next month. It's amazing how quickly time goes. But let's just look on the higher time frame just to give us some perspective here. Price came down, tapped into this inverted fair value gap here. Let's just take a look on the hourly. Check out that low. This is previous day high right here. So price came up and kissed this first presented fair value gap. So this inverted fair value gap is no longer holding. Price could come all the way back down to this fair value gap here, tap into it, and then move higher. Or it could come back down, take London, Asia, access this liquidity, take out all these stops. Given that, you know, we're in our second macro here, I just feel like the market is pretty lethargic. In 15 minute. Push up, a retracement back into this fair value gap, push up, went above previous day high, rejected. This is an immediate rebalance here. This candle and this candle. See how this candle came up? This one has come down. This is an immediate rebalance. And then I think, Levere, what you're saying is on the 15-minute, this inverted fair value gap, again, we kissed it and price has rejected. You know, something else that's really, really helped me, something else that has really, really helped me that I've changed as a trader is I used to check a lot of the different time frames, right? And now I really live on the 1 hour, and price has to come into a 1 hour time frame or a previous session high or low, so a significant level. Only then do I want to move down to the 1 to 5 minute to find potential entry. And the entry model is the smart money reversal. It did not touch the 15-minute inverted fair value gap. Yeah, I'm honestly rarely on the 15-minute. Those are my 3 time frames. 1 to 5 minute for an entry model, the 1 hour, which is the time frame that I live on, and then the higher time frame, the monthly, weekly, and daily, which gives me my higher time frame institutional order flow. So I'll just go to the ones. So we have rejected off this first presented fair value gap. Price is showing weakness because if it was going to be strong and go higher, number one, we're in a macro, so this is super weak. And price has come back down to the second inverted fair value gap. And I don't like to see this happen if price is going to be really bullish. Now let's just see if price comes back down to here, but we need to see some strength. We need to see some trying to think of those Norwegian fighters that used to sail around the world. Were really strong in battle. I want to see a lot of liquidity purged. And when price doesn't come to a main level, like a strong level, like London, like why didn't it purge London? It makes me nervous. Like I want to see an important level purged. And if it doesn't, it leaves doubt in my mind. It just makes me think that price might come back down because smart money, they're cheap. They want to buy low price and sell high. If we notice the 4-hour candles, they all have like a long wick to the upside and the downside. Like this type of price action is, it's almost as if order flow is, it goes up a certain amount and then it turns around and comes back down again. It's just weak, right? Like just, this is weak. I want price to purge at a higher time frame, and then I want it to run quickly, violently, and with speed to the next level of interest of liquidity. That's what I want to see. And this to me is, this is weak. If by 11:15 there's nothing for me this morning, um, I'll keep my chart up and take a look at 2 a.m. Or sorry, 2 p.m. I want to see the 2 p.m. 4-hour candle open and see if there's anything at the 245 macro. But I want to see this swept, honestly. I want to see London and Asia. I want to see this swept down here. I want to see something swept. So far, this was the best of this morning's setup. But again, only you can know what's in your trading plan. So if you're okay with trading before news opens, that's your trading plan. This AM3, so this is the morning session, right? This is the 90-minute block morning session. So normally AM1 would be accumulation, AM2 would be manipulation, and then AM3 would be distribution. But it doesn't have to be that way because the time cycles are fixed, but price is not. But I would, AM3, you can see that this time cycle took out the previous time cycle, but I want to see it really run for the high of AM2 or higher, but this is just showing to be just weakness or if you're a shorter term trader like a scalper or something, this here would be, possibly an entry, right? You wait for price to come back into the fair value gap and then your exit. I mean, it's a pretty fast exit. That's what I'm not good at. Like, I'm not good at scalping. But, there's lots of traders that are really good at scalping. And if price is going to be super bullish, I don't want to see it break through two inverted fair value gaps here and then reject off the first presented fair value gap. Now tomorrow we have flash manufacturing at 9:45. I think it's ICT that says, when price has these big pullbacks, this is high resistance liquidity. Just deep pullbacks, a move up, another deep pullback. Like the last 2 days, oh my God, the deep pullbacks were crazy with the finance meetings. This green line here on my chart, so this is equal highs. So over here we had some price distortion with some equal highs, and we've tapped into that. Price tapped, previous day high, came a little bit lower, but doesn't seem to show any interest in wanting to move above previous day high. We've got previous day low down here. We have this BISI, we have this BISI. This is the daily. For me personally, like I like to get into the trades that IPTA is engaged, it's purged a significant level, and it's driving on the autobahn and it wants to get somewhere. Those are the kind of trades that I like. You know, you're in and out in half an hour, not sitting in rush hour traffic in your city, right, at 4 p.m. So guys, we have 5 minutes left of the morning macro. And so my rule for myself is if I don't find a trade like before 11:15, my morning is done. And but I will come back at 2 p.m. just on my own, just to see if price decides to come back and take this London low, Asia low, and then if there's any movement. And if not, I'll be back at 9:15 tomorrow, and we'll see if there's a setup. So let's see what it does here on the first presented fair value gap, if it rejects or if it finds support above. I'm on day 3 of fasting, guys. Anybody here fast? Your mind gets really, really sharp when you're fasting. This is like death by 1,000 paper cuts. Okay, so that ends the second macro of the morning. Pretty lackluster stuff. Like if somebody had, if a trader had taken this trade, your stop loss to be safe would have had to be like the high on this candle, so 658 to the low, 601. So that would be 57 points. Your stop loss would have had to be 57 points. Otherwise, price would have come back down, taken you out, and then gone to right back to where it was. So that's a deep retracement in my view. Like my whole shtick is that my stop losses are really tight and I take really, really long runs so that I'm not risking, like my risk is really, really small with really long runs. That's the kind of trade that I'm looking for, right? I don't want to risk any more than like $50 per contract, but I want 100 points out of that, right? Oh, XMT, you fast too? Oh my God, I just love fasting. Like, I honestly, oh, you closed the trade, Levere? Well, it looks like it's going to come down now anyway. XMT, I love to fast. Like, my longest fast was 10 days. I started to get grumpy like on day 9, but um, I just feel like my brain clarity is so clear and I feel like so energetic and I sleep really, really well. Uh, so I have water. I take water, sometimes salt, and sometimes I'll put some vinegar in water or lemon, like lemon. But that's all that I have. Like I don't put dairy, like I don't take anything except water. Water with maybe some lemon. But I feel amazing when I'm fasting. And I just like I don't really plan on it too far in advance. Like sometimes I just, I sometimes I just wake up and I go, you know what, I just feel like I need to fast for 3 or 4 days. And then I just fast. Anyway, today's day 3. I feel awesome. I feel amazing. And I'd like to be able to fast like 5 days. So maybe I'll break my fast on Saturday or Sunday morning, I think. But if you want to get rid of like some subcutaneous fat, fast. And then the health benefits are autophagy, right? So your cells regenerate themselves and your healthy cells eat your unhealthy cells. So it's really a nice way for the body to do like a cleanup because the cells don't have to worry about digesting food, right? Like they move on to the job of autophagy. So it's really, really healthy for you. Oh my God, this is like, oh my God, price action is like garbage. So either way, if price slowly grinds up over lunch to above here to AM2, then we'll look for a reversal at 2 or 245. And then if price drops down and takes out Asia and London, then I'll look for a reversal to move up. Yeah, XMT, I totally agree with you. You know what it is for me? Sometimes it's just like you get to the point in your week where like you have to go grocery shopping, but I hate buying groceries. Like literally, I hate buying groceries. It's the worst. It's like the worst thing for me. So when I need to buy groceries, I go, you know what? I think I'm just gonna fast. And then I can put off having to buy groceries for like 4 or 5 days because it's just you don't want to fast when you have like a house full of food, right? Because you don't want anything to go bad. We might see a push up to here to AM2. Oh, why is price so slow, Lemire? I'd like to know. What's your take on it? Why is price so slow? And we're in a gap. Which gap are we in? There's a huge gap. It's like January 18th. New week opening gap. Okay, possibly. Yeah, I see it. Yeah, January 18th. I'm not sure why that just because we're in a gap that we would go slow. Sometimes gaps go incredibly fast, but definitely we're in a gap here. Yeah. Yeah, January 16th to 18th. Yeah. Yeah, I see that. Well, guys, I think I'm gonna move on to other things in my morning. I have other things to do. So I'm gonna close the live, but thanks so much for joining. I'm going to, if you guys could like, share, and subscribe, I'd appreciate it. I'm going to drop into the body of the discussion the videos from one video from JME from his series and one from Zeussy. So you guys can choose whichever one you want to listen to. Like, they're both pretty much the same, except the delivery is a little bit different. I personally like JME. He's very mechanical. He's very strict checklist, which I love. So you guys can check that out. And then if you have any questions about the time cycles, you can let me know, or, just dump any questions that you have into the body of the video. I think manipulation is just delayed because we range through London and AM1, and so I think this could be delaying manipulation. So that's why I'm interested to see if 2 o'clock to 2:45 produce anything that's a little more interesting. If not, you know what? Who cares? Go and do something else. Enjoy your day, and then we'll look for something tomorrow. So have a great day, everyone, and be safe. I'll talk to you later. Bye for now.